Good afternoon, it's Quant Trade Edge, 1 p.m. Central. Wanted to start today's wrap up early, and much of what we were looking at is already played out, and there's a lot of good setups for tomorrow, so I just wanted to get on top of that. So we already detailed how the gold 4x trade played out. I wanted to show you how the same thing played out in silver. So yesterday's setup for silver was also a very decent setup. It was an inside bar, green candle, that's previous day high. So when that first broke, it pierced through 6:30 to 8 p.m., roughly the same time gold did. And then here's where their rhythms were slightly different. You had this, one leg down from that high, and then we had this one bar up piece, and then down here, and this low was 25.17, this low was 25.17 and a half. So it meets all of our criteria, a lower low, and the setup here. So it then gave us an inside bar, and the breakout of this bar would have been our entry to the 4x pattern. It looked good for an hour, and then it kind of pulled back, and this area at 4:30 a.m., which is when gold made its lower low, silver actually made a higher low. So with silver, you would have gotten in, say, 2 a.m. as opposed to 5:30 a.m. or whenever it was with gold, but the outcome was the same. It took a little bit longer in silver, but which is also why when looking at these two highly correlated instruments, we chose to go with gold over silver because the setup was better, even though the setup is very reasonable. So again, that would have been your setup bar, and 26.5 minus 17, 9.5 times 4, 38 cents on top of 26.5 puts us at 64.5. So 64.5 right here is where we achieved 4R, and silver is a lovely notorious market. Would have gotten 8R if we held it up until 02.5. So about here is 8R. So again, crazy asymmetric risk to the upside. Now, remember from the daily pattern, let's clear away some of this stuff. From the daily pattern, we had this inside bar, so we could also see what happens when the second bar breaks. That first setup occurred when the first bar broke of the inside pattern. If I could get this to cooperate, there we go. Let's see what happens when this broke. This high was 59, I believe, 25.59. And let's pull it back. Okay. And let's add our Keltner channels. And basically it broke here. And, this wasn't a great pattern. You've got, 57.5, 57, you've got equal lows. It's more of an expanding pattern, not one that you would typically take. But now up here, we closed above the Keltner, kept riding above the Keltner. I guess this right here was a bald man pattern. I wonder if it was doing anything significant with the RSI. Let's, if you remember, our hypothesis is that these bald man pattern work well when you're just breaching a level. So here, we were not just breaching anything, unless you consider 80 significant, which I usually don't. But it's good to see a bald man pattern work. But here's the pattern that caught my attention. Once we had all of this action above the Keltner channels, we had our very clean A, B, C. Blow that up so you can see the bars, up bars, down, up, down. So this becomes our risk bar. This doji right here. And this doji had a height of about 86 to 75, about 10 or 11 cents. And we ended up getting about, let's see, it would be about a little bit over 2, maybe 2.5 times. Okay, I remember the number now. 07 was 2 times, and we got it right here. So 07 is 2 times, 16 is probably close to 3 times. So, again, if you didn't catch the overnight pattern, you have this ability to then watch the next significant break on the daily and look for a shorter term pattern. Now, if you look at what's setting up right now in silver, let me take it back to the daily for a second to define another concept. This concept is called the volatility contraction pattern. And on a volatility breakout system. On a volatility breakout system, you take the high and low of the previous bar, add it to the close. The high, so basically the range of this bar was 22.59 cents. 59 cents added to this close, 29.29 plus 59 cents is 20. That doesn't sound right. 25.29 plus 59 cents is 25.88. So basically, when we broke 25.88, there are systems that actually go long this far above the breakout, and they are robust systems. You can use a little bit of discretion with them, but the key point to that system is that the next day we should test just above this high. So with that, armed with that knowledge, what we're seeing here is a 30-minute pullback. This little A, B, C, and we have pierced that high. So this can be a risk bar here to try and play for that high. If this one fails, maybe we look for more of a pullback down to the EMA. Maybe even the 60-minute. This was quite a violent move, so there could be a bit of consolidation here. We're right into that consolidation zone, so that's nice to see. But yeah, these are just more concepts that I'd like to stack onto our existing concepts. There's just a lot of things that you can see when you can apply in real time to the trade you have in progress. So let's move forward to cattle. Now, yeah, that is a crazy market. I haven't traded cattle in quite a while, so I was a little reluctant to take this, but I wanted to get my feet wet again because the more uncorrelated markets we have, and they all trade basically the same way, that just gives us more things to choose from, because our goal is just to find the one really good trade each day and make that 4 times our risk. And today for me that was gold. But on a day when nothing else is setting up, I would like to get cattle to be battle tested. So here again, big, long lower tail, shorter upper tail, green candle, has all the markings for a 4x trade. Now, the opening bar was this big long bar here, which was basically a hoagie. So let me blow it up here. This bar. So this bar became a hoagie, and I want to extend it out for a reason. So we didn't get any good ABC pullback here, but we had the break of a hoagie. So if since I'm just in testing mode anyway, took that trade to the long side, and then it kind of fizzled. But something really interesting to note is that low held. So this gap has held the entire day now. That held right there, and it's another hoagie right there. So this gave me the ability to add back and pretty soon I was at break even, and then pretty soon I was in the profit zone, and just cashed out and called it a day, fiddling with a new market there. But there's no reason why this shouldn't respect it, and it might carry forward into tomorrow. I'm just not into holding that kind of risk overnight. And the reason I say that is just because we do have a gap that is held. So, that is a piece of market-generated information that is significant. Let's see. Yesterday we were also looking at the British pound, and that was because we had this red setup bar, which was reasonable. Although we did recognize that we had a decent impulse before it. And this is a situation where the market itself protects us, because we got that first break down here, but then the way these bars formed, we got an up, a down, really, because of these outside bars, we have up, and then these are already down, and then this is up, and this up is not above the prior up. This is sufficiently sloppy enough and fading around all day that there was no signal to get into it. So chalk this one up to probably not a great setup. There might actually be more upside coming, but either way our system protected us because it didn't give us a setup. Then the other thing we looked at was the Russell, and the Russell had a good size red candle, lower low. So this had all the markings of a decent setup. Take it down to the 5-minute, and now this is where a little bit of experience helps, but we got this piercing, and then we did get this A, B, C up. Now, the thing I did not like about this is that it is tight and sloppy. So typically you want to see, loose and sloppy. Typically you want to see a very tight pattern. But even if you were to have taken this pattern here, it is a valid setup, per the Forex rules. What ended up happening is we stopped 2 ticks shy of hitting just 1R. So if you can't even get 1R, and then we turn around and spend all this time in here, and then the stop would have eventually given way. So typically if the most likely outcome doesn't follow through, I start paying attention to the other side of the equation to see where can I perhaps go long this market. And right now it's still kind of a choppy market, but for tomorrow we are setting up with a pretty decent looking buy setup. If we were to take out that high, and if we look across the markets, we've got Hoagies forming. This is the S&P, and we've got a Hoagie here. NASDAQ has a Hoagie here, and NASDAQ looks the strongest of the bunch. That's 9075, 8725, 82. So, again, breaking above this 9075 would trigger that Hoagie tomorrow. And that might actually be the better play than playing the Russell, which is kind of lagging. It's holding back from this line. But it did make me look at the Russell in another light. Let me switch to IWM just for simplicity of contract rollover. But we basically have this very large range. Call it from here to here. And we do now have this ABC pattern, and this is a 130-minute chart because that splits the day into exactly 3 pieces. Let me make sure that's what's happening. 8:30, 10:40, 12:50. Yeah, or does it need to be 135 minutes? 1 o'clock, 10:45, 8:30. You can tell by, oh yeah, it needs to be 135 minutes. So it doesn't change the pattern that we have, but we basically have, gone from an up bar to a down bar. Where are the rest of these? I don't have GAN ups on there. Let's GAN up. So we still have this very clean ABC pattern on the Russell. off of the highs, A, B, C. This is a decent sized risk bar, but it's kind of just chilling out right now, barely breaking out. It is possible we get down halfway and can get a better fill. But I think we're kind of biding time as Biden's talking, market's kind of going sideways, and then I don't know if it's going to be later today or tomorrow that we get the actual breakout to the upside. But all of this fits within a longer term volatility compression pattern. And remember, the criteria for that is an ATR3 divided by ATR20. It's less than 2/3. We're down, this bar here was 0.61. We're down to 0.55. So we definitely have volatility compression in here. And then if we look at the volume green, volume red, it's not as easy to see on that. Yeah, it's not great to see here either, unless I turn it into a pit chart. There we go. That's a little better looking. So basically what I was looking for, I wonder if continuation, no, that messes it up. T135. I could put continuation settings on here. Yeah, it's not. We're not getting a good read on the volume here, but what we're trying to look at is from the bottom. We do have more green volume than red volume. We do have a compression here, and we do want to see volume drop below. It's just that this volume is. There we go. Maybe I'm looking at it on a 45-minute. We could actually get more granularity on the volume. And remember, for this setting we use a simple 30, and we can see that there has been kind of a drop off in volume as we get this compression. So these are all signs that one, the fact that the obvious downside play failed. And then, looking into the bigger picture, we're just in this range, we're hanging out at the top of the range, and this is potentially a vol compression pattern. So we won't know until tomorrow if we see this, pop up there. So now let's go ahead and look at setups that are setting up for tomorrow. And, copper is one. That's a good looking bar. And let's focus on the Taylor and, do a little mini lesson on that in here. So the Taylor, so like a little cheat for the Taylor is using the 2-period rate of change. And, we can see that we did just have a PF3 up here. And then we did flip down. So that is a very valid setup bar on the daily for copper if we break that overnight. Another one that is closely correlated is the Australian dollar. Now we have even more going for the Australian dollar. We have 2 PF3s, a flip down, and a divergence, a 2-period rate of change divergence. You can see right here, what that means is when we made this high right here, we made it on more momentum than this high right here. So the fact that we can go make a higher high on lower momentum is a form of divergence. And if you break it down further to a 120-minute chart, and let's look at the LBR 310, you can see the 3 pushes. You've got, I wonder if they're into the Keltners. Let's see. You've got one push here into the Keltners. Let's circle them. We've got one push here on lower momentum into the Keltner, and we have one more push here. Just shy of the Keltner up there at 9 a.m. And this pattern here is also called the slingshot, which is a lower low in momentum, but on the price we actually had a higher low. So between this low and this low, we had a higher low in price, but a lower low in momentum, that typically happens on the last flag that gives you the last hurrah. So everything from the daily to the 120 is consistent. We have 3 pushes up, which typically leads to an ABC down. We have a slingshot, which typically happens at the very end of a move. And then on the daily, we have a really beautiful, Taylor situation. We have a momentum divergence on the daily, the 2-period rate of change. We have 2 PF3s up and a price flip down. The only thing that would make this prettier is for this candle to close red. And that can happen. I need to check it again, 5 p.m., see what it looks like. But we're barely trading 8 or 9 ticks above the 10 ticks maybe above the open. So everything's lined up for that to be a potentially good downside trade once we break it. Further, you could look at things like U-turns, right? So once all of that happened, if you were expecting that price weakness, I believe the first thing I watched it on was a 3-minute. You have your A, B, C, and breaking below 75.15 gave you a 3-minute U-turn. When you look at the 5-minute, this was all one leg, so then this became the second leg, third leg, so you have to break below 75.09, 9.5 to get that 5-minute U-turn. And let's see what it looks like on a 15-minute. It's reasonable to go up to a 15 given that we're using the 120 to guide us. There we go. This low is 3.5. This low is 3.5. So you have equal lows down here. So you'd have to break 3.5, and then you'd have a 15-minute U-turn. So it all depends on what your risk parameters are. If you're happy to get into it early, any of these U-turns could take you in, stop above the high of the day. I typically like to wait for the next day to take out the daily low and then catch our little retracement trade. And again, it boils down to philosophy. If you're trying to get the highest price and the lowest price, then you can be early. What I'm trying to do is just catch one trade somewhere in the middle of the move, closer to the beginning, where I can make 4 times my risk. And if I can consistently do that, the rest of it is just sizing. So for me, I prefer to do it that way, but there's many ways to skin this cat. And let's see, crude is another one that has it's a good setup bar. It's red, it's got tails. The Taylor count's a little off. We've already had a couple of days down, but crude has been a viciously moving market. So if we take that out, I would just look into it. Gas. Now here's an interesting one. This is one where we said that if we take out that low, we can watch for our situation. Well, there was the EIA report, the inventory report today, and right on that bar is when we got our move down. And then if you notice, you put the day's low. So imagine taking out the low of day, and in the same swing on a 5-minute chart, we took out the high of day. Right? This is all one swing. So if you were looking to enter this, this is where you would have gotten your setup bar, but you should know that by now we're trading above the previous day high. This whole setup is void. The whole idea is getting acceptance below here, getting a little bit of a retracement in here to get the actual move. So if the first leg takes you all the way from below the low to above the high, that the strength and momentum to the upside is just too high. Another interesting pattern forming is just on the euro. We now have a Hoagie. We've got these 2 days, it's technically an ID2. 90 days, yep. Basically, this is inside of this. This is inside of this. That's a very breakout pattern. Theory could break either way, so stay open-minded to that. And just as we'd mentioned earlier, when you have such a large move, it's very reasonable to accept that we're going to, expect that we're going to retest the high. So gold had a similar thing to silver. It's not actually given up as much room as silver was. Silver's given up more room here, but the same concept. Trying to look for that play to the top here. So I would say the Australian dollar, if it can close red, would be the choicest of the setups. Behind that, copper's always good. And then what's nice about Australian copper is they tend to trigger early and play out early just because of the time zones. So that could give you an opportunity to reload your capital for tomorrow. If we get something in crude or, what looks better now, the NASDAQ, if we're able to get a Forex setup in the NASDAQ. So tall order, but let's try to nail Forex on Australian or copper overnight and then reload in the morning on the NASDAQ. And if we can do 4 and 4, that would be great for a day. So anyway, sorry this wrap-up got a little long, but there's a lot of nuggets in here. I want you to look at each of these wrap-ups as a lot of lessons in real time as well. It's not just about what can I trade for tomorrow. That should really be your last concern. Your first concern should really be picking up the methods, fully understanding everything, and then, at the very end of all of that, to risk capital. But anyway, and disclaimers, of course. I'm not telling you to buy or sell anything. Just teaching a method here. Take it or leave it. And hit that like button. It does help me, reach more people and ask me questions. I love answering them. They actually help me think about things more critically, and I'm able to improve on my method going through that process. So anyway, have a good rest of the day.